Hello everyone, welcome to the Stock Trading Tutor channel. In this video, we'll be seeing how DHFL's debacle has dented the sentiment and what investors can do for their long-term investment plans and what steps they can take to mitigate the risks and how the situation is basically. So before we go into that topic, I'd like to remind you about the stock market awareness program which we are conducting. This is a free training session where you can learn about the stock market and clear all of your doubts and queries if you have an experience also with market experts who have many years of experience in the field. Now, this specific program is happening in Bangalore for the Karnataka region. However, if you're from a different region, you can still fill in this form for registering, that is, and the region which has the most number of requests will get the next training session conducted in that area. However, to register, you have to fill in this form, and the link for this form we have given in the description below. You'll just have to fill in your basic details, your name, mobile number, location, and your email address so that we can contact you and inform you about any upcoming updates. Now let's go into the news. The credit markets have been roiling with a series of rating downgrades since August 2018, starting with the ILNFS, Z Group, Reliance ADAG Group, and now DHFL. This has also led to banks and mutual funds being risk averse in lending to non banking firms. Now, NBFCs with higher real estate lending portfolios have been punished severely, and this could have a spiraling impact on mutual funds having exposures to them. Over the past 4 years, the credit outlook has been drifting weaker. The credit ratio trends have been gradually sinking lower and lower. No wonder then that the credit spreads have widened and been attractive for a while, especially the spread between the corporate bond yields and the government securities. On the other hand, the supply of corporate bonds has slowed down after the ILNFS debacle. GOI has announced that the first half of the financial year 2020's net borrowings are at a 7-year high of 3.4 lakh crore rupees, with front-loaded borrowings and back-ended redemptions. About 1.43 lakh crore rupees is going to be issued in the 10 to 14-year bucket, leading to oversupply of government securities and pressure on yields of that tenure. Overall, the outlook for the long term, government securities should be cautious in the near to medium term given factors like unfavorable demand supply conditions, inflation, and fiscal deficit concerns. Now, let's look at investment strategies that can be taken. So, the attractive valuation spreads over government securities and favorable demand supply dynamics should keep corporate bonds attractive. Also, given the lack of catalyst to shift the yield curve downwards, the long end should likely be volatile despite being attractively valued. Potential liquid improvement efforts could help short term bonds or funds positively. Now let's look at portfolio strategy. So bond funds come with two key risks, interest rate and credit risk. And investors' objectives to deploy in debt funds are the safety of principal, liquidity, and returns in that order of priority. In the current environment, one has to see the trade off between assumable risks and investor objectives. Given the current market conditions and risk reward, investors are better off in ultra short, low duration, short term, and corporate bond funds depending upon their investment horizon. Credit risk funds and funds with meaningful exposure to below AA rating in any category do not appear to offer favorable risk reward, and hence we suggest to avoid this category of funds. Allocations meant for liquidity management should be kept in overnight and arbitrage funds. Given the broader risk aversion and credit environment, advisors suggest investing in open ended funds or liquid instruments. Thank you for watching this video. For more videos on stock market and trading, please subscribe to this channel. If you'd like to create a free Demat account with Alice Blue, click the link in the description and fill out your details. You'll also get intraday recommendation calls and you can learn robo trading software for free.